mainstream Let's Talk Crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the rest of Bitcoin as a proxy for the cryptocurrency markets Elliott. Today is September 19th, 2023, and I want to tell you why I believe that this next move in Bitcoin to the upside can go to $49,000 before another significant retracement. Guys, if that sounds interesting to you, then watch until the very end. We're going to talk about Bitcoin to 49K. We're going to talk about altcoins to $1 trillion. And we're going to talk about the latest in what we're seeing in the DXY. Guys, let's get started with Bitcoin. Okay, why 49K? Right, first, before we talk about 49K, we have to talk about this orange line. This orange line is very important. And this is one of the reasons I'm very keyed in on 49K. This orange line is actually at 32K. 32K is significant. 32K was the support for a very long time as Bitcoin did its distribution, right? Its distribution channel before going into the depths of the bear market, right? So basically, 32K served as support for quite a long time, giving traders, giving investors, giving analysts hope that maybe it wasn't a distribution, maybe it was just some sort of intra-wave consolidation before an extra move up and a breakdown ensued, okay? And that breakdown, as you can see, was almost exactly the height of this distribution channel to the downside, right? Channels break up and break down, usually the height of their the channel superimposed from the neckline, from the breakpoint down or up, based off of, you know, if their accumulation or distribution channels. So that happened. So 32K was the support of the price for that whole time, and that whole time was right 500 days. So that is a significant level. You're not going to just you have to do something with that level. This is what I'm saying. This level is significant. Now, after that, we got a move out of the bear market, right? You see this rounded bottom accumulation channel, inverse head and shoulders, whatever you want to call it. This is a move up and out of the bear market, right? Taking around 300 days or so to accumulate orders, right? Get everything, right, settled. 275 days. And now what we're getting is a break up and out of this inverse head and shoulders. And of course, we found resistance at none other than the $32,000 that served as support for 500 or so days. This is the orange line. Previous support now flipped into new resistance. That's normal. That's natural. We should have expected it. Okay, if you didn't expect it, you should have expected it, because it's a 500-day resistance. You're just not going to break through it in the first try. However, what we have here is one attempt, two attempts. You're probably going to get some sort of small consolidation, some sort of small retracement, right? You could get a large one, but likely what's going to happen is, as you matriculate up through this level, you're going to get a small retracement, a small reaction, and you're going to break it. Lots of amateur traders, analysts are going to think that's it. No, you do not treat 500 days of resistance and break it just on one little move like that, even though you had henceforth or prior to that breaking, you know, rejected off of it, right? In this three-wave correction pattern, right? Obviously, right? 1, 2, 3, A, B, C, W, X, Y. It doesn't matter. It's a three-wave corrective pattern. So if we do go into impulse, what's going to happen, like I said, is likely a small correction, and then we pop up and out. Now, this is where 49K comes into play. 49K comes into play because we can say that upon further inspection, this right here is the beginning of an impulse, right? We've had some sort of accumulation channel right here after the end of this three-wave move, right? And now this is the markup up and through that channel. And then that move, that uptrend, that markup gains life when it hits those volume gaps here, hits those volume gaps here, right? It starts going a little more impulsively. So that's what we should expect. So 49K is my target for this next upside move, because if I take my Fibonacci retracement tool from the bottom of this purported impulsive move all the way to the top of where it possibly could go, and I see the 618 or phi ratio retracement, it stands at 32K, and the top would be around 48.6, right? Let's just say 49, right? If you extrapolate it, if you take it up a little bit. I hope this makes sense and it's not too kind of too crazy. But 49K is basically what an allowable target would be with a retracement level that didn't go beyond the 618. Why is the 618 so important for retracement? Two reasons. One, the maximal retracement in any truly impulsive move is the 0618. Two, you must, and I mean with the high degree of probability, when I say must, there's no 100%, but 99.99%, you have got to come back and retest those 500 days of resistance. And you can even say it's more than 500 days, because it was 500 days of support here, turn resistance. Add to that the resistance here. So it's probably 700-800 days of resistance. You have to flip that into support in earnest, right? It's not going to be enough to just hit your head on it during this move right here. If you pass this, and you will, you're going to have to come back. How do you come back? You're going to come back with the 618 retrace. That's a maximum retracement level in any impulsive move, truly impulsive move. So that target is likely to be 49K. That's how I'm getting 49K for Bitcoin, okay? When will that happen? I don't know. But I wouldn't underestimate the verve of this next move. 49K isn't a million percentage points from where we're at. It's only 80% from where we're at. Understandably, people think that's impossible, given that we've only done about 80% since the beginning of the year, but that's not how you think about price action. Price action isn't a linear thing. It moves parabolically. So if you think, well, logically speaking, if we've only gone 70% from January 1 to 2023 to present day, September 19th, 2023, it's impossible that we go 80% in the span of a few days. Wrong. That's why trading is difficult. That's why trading is challenging, because it doesn't work that way. And if it did, it would be super predictable, but it doesn't work that way. Just backtest, go in and read some charts and you'll see what I'm saying. Another reason 49K is likely is look left. Look at what happened in this move down, okay? You got some sort of resistance at 49K, important enough to cause this move right here, right? So basically 49K was the final resistance for this intra-wave correction, right? It came down, it went up, retest, and it's like, ooh, can't do it. That's too strong of a resistance, and it continued its way down. So 49K is my magnet to the upside, because for two reasons. One, it makes the 618 retrace for 32K, so that looks really nice, right? That's just very likely to happen. And two, it's a level. It's an important level because it proved to be an important level on the way down, okay? So I'm really targeting 49K. I've got my yellow line, which is my target, with an alarm set for 49K, and it's because of 32K, and it's because of what happened before. So that's my case. Now, one could say, Dean, that makes sense, good analysis, but there's no way that's happening in a few days. let me tell you why a few days is likely, given what we see in the altcoins. And for that analysis, let's turn to the total two. Guys, if you're getting value, please like, share, and subscribe. Look at the total two. The total two is the aggregate of what altcoins are doing. Altcoins are targeting $1 trillion. Okay? $1 trillion. Now, altcoins they're not exactly like Bitcoin, but they're very similar. Okay, Bitcoin's been up about 70% year to date, right? From the beginning of 2023 until today. But altcoins, for the most part, have been sideways. They've been sideways since last year, the summer of last year. Okay, they haven't done much of anything, right? And this is most of the reason why any crypto investors have been so down bad, because yeah, although Bitcoin's moved a decent amount, most people are invested in altcoins. A lot of people are invested in Bitcoin, granted, but most people are invested in altcoins because that's the majority of the market. So if you look at what altcoins are targeting, it's twofold, kind of like Bitcoin. So Bitcoin has that $32,000 level that is major resistance that you're going to have to come back to. Altcoins have this level right here, okay? By this dotted line I tried to show, this is the level. This is the level beneath which we've been doing all of our accumulation since last summer. Okay, that's a long time. That's about 460 days, 470 days, okay? And so we're not necessarily going to break this and just keep going. Just like 32K in Bitcoin, what you want to think about is, okay, we break this, we're going to have to come back, retest 460 days of resistance as support. This is why I'm targeting $1 trillion even, okay? Second reason I'm targeting $1 trillion even is if you take a Fibonacci retracement tool from the top, I've already done this just for the sake of time, to the bottom, to the orthodox bottom of this move right here, what you'll see is $1 trillion exactly to the penny is on the phi ratio. So there's confluence there. Two factors that tell me that altcoins, actually three, there's one more. So first is the fact that $1 trillion is at the phi ratio of this entire move down. Two, $1 trillion is actually the target of this inverse head and shoulders or bullish reversal pattern, if you want to call it that. I don't know what it is. If it's cup and handle, inverse head and shoulders, it doesn't matter. You take the height of this pattern, superimpose it from the side of breakout, you get $1 trillion. That's two. Three is, now let's just clean this up. The third thing is, if you take your Fibonacci retracement tool, kind of like what we did with Bitcoin, from the bottom of this purported move, right, which is maybe the beginning of our impulsive move, right? You take your Fibonacci retracement tool all the way to the top. Look at where, guys, this is confluence. Three different factors, right? This is why trading plans, not all trade plans are created equal, because trade plans that have confluence, there's so many things that are giving you the same answer, they become more and more probable. And obviously when we're doing technical analysis, we're just dealing with probabilities, not 100% certitude. But if you take your Fibonacci retracement tool from the bottom to the top, right, saying $1 trillion is the purported target, what do you get? 0.618, right back down to this 460-day resistance. So that is really, really likely. And what is that move? Okay, what is that move? Altcoins haven't moved all year. Look at it. Look at the chart. Altcoins haven't moved all year. They haven't moved since last summer. And last summer, they found a bottom. So this will be the first move in a long time. First move up, rather, in a long time. And that first move up to $1 trillion from where we're at now would be a modest 90%, 94% move. Okay? The move from where we're at now in Bitcoin to 49K is about 75-80%. So that's comparable. Usually altcoins outperform Bitcoin. Altcoins in the aggregate outperform Bitcoin by a little. That doesn't mean that every altcoin is going to move 94%. Some are going to move 300%. Some are going to move 80%, right? But in the aggregate, that is a realistic target. $1 trillion. There's 3 different factors of confluence telling us that that is a very likely possibility. And I really like using simple support and resistance. It's not about some arcane, convoluted Elliott wave count, right? Although I would consider myself an expert in Elliott wave theory, simplicity is best. Support and resistance. This is resistance. You're going to find some resistance when you hit this level, but I believe that you're going to break it, but it doesn't mean you're going to just keep going. You're going to have to come back, and that 618 retrace is exactly what you want to see as a wave 2 in a truly impulsive move. So this is why I've got my alarm set at the $1 trillion mark, and actually this is another level of confluence for my Bitcoin read to 49K, because it's not exactly, obviously they're different, but they're similar. If I had altcoins moving 1,000% and Bitcoin moving 5%, something's off there. It doesn't work out. But again, right, 90 to 94% move in altcoins, and we're looking at about a 78% move in Bitcoin. That is something that is believable. It's likely. It's what we've seen before, right? Altcoins will generally outperform Bitcoin, but slightly outperform Bitcoin in a move, right? By a little bit. But in the aggregate, they'll really outperform Bitcoin over the course of an entire bull run. Okay, but that's a different story. Now, last but not least, guys, if you're still with me, that means you're getting value. Definitely like and subscribe. Give me some support here with the algorithm. Now, the US dollar currency index is doing what we said it would, okay? We said there was very high likelihood that this rising wedge of about 25, 30 days, I don't know how long it is. You want to measure it? Let's measure it real quick. Is it 90? I don't remember. Okay, it's about 20 days. 20 days. 20 days was likely to break down. And this is what we're getting, okay? We're not finished yet, but we started getting a breakdown. For the first time in 20 days, this support was broken right here, okay? Now, I said yesterday that we'd probably break all the way down here. We didn't, but we broke it, okay? And what did we do? And I did say this. What did we do right after we broke it? We retested previous support as new resistance. So that's what we're getting. That's what we got. And so what you want to see is what we're seeing. In a true break, you don't just want to see the asset break down. If that happens, that's not a true break. You're probably going to get a check back, and it's probably going to be a fake out. But in a real break, what you're going to get is exactly what we're seeing here. A breakdown, a retest of previous support as new resistance. That 20 days, the bottom of this rising wedge was previous support. Now we're retesting it as new resistance, forming a rounded top, right? That's our new resistance, and you can see this is rounding, right? It's rolling over. Our momentum indicator is showing that it's rolling over on the hourly time frame. If you actually jump down to the 15-minute time frame, you can see confirmed bearish divergence, okay? Confirmed bearish divergence, we have a high and a slightly higher high here. Here you have a high and a lower high. Bearish divergence. So that is coming down. It should continue to go down. So this is what we want to see. This is what we want to see. On the higher time frames, you're getting a daily strong. Oh, remember this daily bearish divergence was unconfirmed yesterday, right? We were talking about it. We said it wasn't yet confirmed. Now, my friends, it's confirmed. Confirmed bearish divergence with that a rising wedge. So this is exactly what we wanted to see. This is what we were saying would catapult us in up into, you know, higher levels for Bitcoin and the rest of the crypto market. Guys, that's my analysis. Hope this was helpful. If this was useful, like, share, and subscribe as always. And I will see you later.